Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank Malaysia and streaming out of the new offices in Kuala Lumpur. Tina Teng Markets Analyst, CMC Markets Asia Pacific and Canada, is our guest today, coming out to you from Auckland, New Zealand. Tina, welcome to the show.
Hi, how are you, Brian?
I'm good, thank you. Tina, before we get your insights, let's take a quick look and see how markets in the region are performing. But first of all, let's start with the cryptocurrency market. Now, Bitcoin is at 38,419. It's down 5.32%. Ethereum is at 2,845.9. It's down 5.35%. Now, if we look across the regional stock markets, we've got the SGX, which is at 3,319.2. It's now down 0.09%. The KLSC over in Malaysia is at 1,589.64. It's down 0.44%. Shanghai is at 2,902.89. It's up 0.57%. The ASX All Ordinaries is at 7,552.7. It's down 0.67%. The Nikkei is at 26,326.5. It's down 1.41%. The Hang Seng is at 19,949.5. It's up 0.05%. And rounding up the numbers, we've got the Kospi, which is at 2,630.30. It's down 1.42%. Now, Tina, what's your view on market performance in the first half of the day across the region?
So overnight, just because broader equity markets were sold off in the U.S. market, that's the reason why the broader markets, including the Asian markets, had fallen yesterday. From today's performance, as the markets are bouncing back from the lows, and also the U.S. futures bounced back from the 1 year low as well. So across the broader markets, I think the risk sentiment is still low, just because the U.S. tech shares were sold off amid the rising rates, China's lockdown, and ongoing war-induced surging inflation. And also the recent U.S. earnings shows that slowing growth of the major tech companies, such as Netflix, Alphabet, and the energy crisis, the surging oil prices and the surging natural gases. Just all in all, now investors just have the fears of an economic stagflation or even a recession in the foreseeable future. But because now the markets at their lows, potentially there will be some deep buyers might find the opportunities, and they might merge into the beaten up tech shares as well. At the same time, China's lockdown might be loosening up, and the government is exposing more stimulus measures, which could lift sentiment as well.
And speaking of China itself and more stimulus measures, what's your view on the probability that more stimulus will be pumped into the economy in the next 2 to 3 weeks?
Yes, I still think the Chinese government is trying very hardly to pump up the economy because, the lockdown have a major impact on the whole economy, especially China is the second largest economy and the biggest manufacturer in the whole world. It's have a major impact on the supply chain and for itself, and the softening yuan devalued hardly against the US dollar as well. At the same time, the Russia will put on pressure on the energy prices and food price. I think China is facing severe challenges this year, and the Chinese government will try to stimulate the economy the whole year and trying to boost the economy or soft landing.
Okay, also then, you briefly talked about energy prices. Oil has bounced back a little bit, so has gold. What's your trajectory in terms of, or your view on the trajectory of those two commodities?
So for the oil markets, I still think they remain strong just because the Ukraine war has a major impact on the supply side. And the gold might keep softening at this period of time amid a strong US dollar and rising bond yields. And I think potentially there might be a rebounding opportunity here in the US tech shares, which will boost the risk of sentiment and at the same time will press on the gold price.
Okay, I want to ask you now closer to home on the Australian dollar and the possibility of a rate hike in May. What's a view from your end in terms of this possibility?
I think the big chance that RBA will raise the interest in the early May in the next meeting. So today's CPI data of Australia is a huge spike to 5.1%. It's even higher than the expectation of 4.6%. That's the highest since 2008, just before the GFC happens. And I think the Reserve Bank of Australia needs to raise the interest rate to curb the inflation before it's too late.
Now, Tina, as always, thank you very much for coming on the show and thank you very much for your insights.
Thank you very much, Brian.
Now, we've been speaking to Tina Teng, Markets Analyst, CMC Markets APAC and Canada on Biztech's Asian Midday Market Watch, powered by Rajhi Bank Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Rajhi Bank's social media platforms. Please subscribe and like our various platforms. Thank you very much for tuning in.